Hi, I'm Arvind Chari. I'm the Chief Investment Officer at Quantum Advisors. Uh, Over the years, the significance of the Indian Union budget announcements on the Indian economy has kind of reduced. The tax proposals or the borrowing numbers or some policy changes would still end up moving the equity and the bond markets. But the union budget essentially is what the word suggests: budget, a statement of accounts of the finances of the central government. Governments, though, have used the budget as an occasion to announce some key reforms or as an occasion to lay out their economic agenda, or mostly for grandstanding. We assign the budget as a low-key event for the long-term economic trend. However, we're still interested and we have our few expectations from every budget that the government announces. Uh, for this budget, as with every other budget, the most important expectation is that please try and keep the devil in the detail kind of announcement to as low as possible. If you remember the 2012 retrospective taxation amendment, that was such a disaster from a sentiment perspective for foreign investors. In fact, in the last year's budget, the reason it was hailed as a good budget was because there were no major negatives. So I think the government should continue with that aspect and keep negatives to as little as possible and keep the investment and the economic sentiment going. We're also always interested to see whether the budget is supportive of growth. We are interested to know how much is the spending on rural India, especially in this year, given that a large part of the Indian economy has still not completely recovered. People who have lost their jobs haven't got it back completely, or people who have lost incomes and livelihoods haven't been restored. And we would still expect from the government that they announce some kind of income or job support to help restore the livelihoods of the people. And this is very, very important. We always look for spending in rural India, on rural roads, on rural education, on rural sanitation. But this time we'd also expect them to give some more broad income support so that the economic recovery that we see is kind of balanced. As always, we would also expect the government to announce and spend on large infrastructure projects, which is, that tends to be a big driver for employment. And if we've seen over the last years that the government has made an effort to increase capital expenditure spend over revenue expenditure. If that trend continues, that bodes well for long-term economic activity. Is the government committed to simplify the tax structure, especially for individuals? And if you see, we have capital gains tax, we have dividend tax, we have dividend distribution tax, then we have interest and all that taxes, and then we have income tax, we have surcharges, cess. There is a significant amount of tax burden that a individual is going through. Even corporates face some of those charges, but at the individual level, I think the government really has to come out and think in a clear manner. Can they simplify it? Can they reduce the multiplicity of taxation that are there, and incentivize in a just manner, incentivize more saving and hence more investment in financial products. For the Indian bond market, this budget could be a seminal event. There is expectation that the government would make the required tax and the regulatory changes, which will then allow Indian government bonds to be included in a global bond index. And that will have a significant impact on the Indian government bonds, on market interest rates, and foreigners who own less than 2% of the Indian bond market over a period of years will be able to own a larger share. And that will be a significant thing. And we wait to see whether that happens. We also want to see whether the government and its intention on how wide it keeps the fiscal deficit. They will be reducing the fiscal deficit, but growth still needs to be supported. So that balance is very important, and that will also have an impact on interest rates and government bond yields. So we would know all of these on Feb 1, and the market movements will suggest whether the budget was a thumbs up or a thumbs down. Do join us on the 4th of February to get some more insights into the budget announcement, and more importantly, to know how it would impact various asset classes and how it will impact your investments in the year ahead. Thank you so much.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.